Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, the U.S. has recently made headlines again with its strategy of tariffs on China, and the impact of these trade policies continue to be felt across global markets. But as the trade relationship between the two countries remains complex, questions are arising about the effectiveness and the consequences of these tariffs. To break this down further, I am joined now by Christine McDaniel. She is the former Deputy Assistant Secretary at the Treasury Department, Senior Trade Economist at the White House Council of Economic Advisors, as well as currently the Senior Research Fellow with Mercatus Center. Christine, it's a pleasure to have you on the show this morning.
Thank you.
Now, as former Deputy Assistant Secretary at the Treasury, how do you assess the effectiveness of the tariffs imposed on China over the past few years?
Well, the tariffs on China, that's a sort of a whole different ballgame than the tariff threats that have been going on over the past few days. But in terms of the effectiveness of the U.S. tariffs on China, you look at the original Section 301 investigation in terms of the complaints of the White House against China. It's not clear that there's been a lot of progress on those major issues. I mean, a lot of these issues are so structural in terms of non-market economy practices. It's not clear that was really ever on the table anyway. But things that were on the table were things like, higher purchases of U.S. agricultural products and, higher purchases of other major U.S. products and goods and services. Some of that has happened. Not all of it has happened. President Trump has ordered a study to look at the effectiveness of phase one of that agreement. So it'll be really interesting to see what they come out with and then how the White House reacts to the findings of that study.
But I'm interested to get your take, Christine, on what you think the long-term impact of these tariffs on U.S.-China trade relations will be, and how do you foresee these relations evolving moving forward?
I think that the U.S.-China relationship is, ever since, I don't know, maybe 2015, it's always been it started to take a bit of a major turn around then. So I don't, if you look at the key big statements coming out of, Obama, Trump, Biden, that, it's always, we'll compete where we can, but we'll protect where we must. And I think both sides feel that way. I don't see that this latest round of tariff threats and the tit for tat is going to be that major. Remember, right when Trump, after his inauguration, President Xi called President Trump, and then that weekend, Vice President J.D. Vance met with his counterpart. So I get this, there's a sense that there's this high level understanding of where the sort of the red lines are on the commercial relationship. I don't think either side wants to ruin that, but there will be certain flare-ups here and there, but I don't think that will be that different from what we've been seeing in the past 10 years. I could be wrong, but I just don't get the sense that President Trump wants to blow up this relationship.
I do want to talk more about those different flare-ups that you're referring to. Do you think these tariffs will lead to unintended consequences?
Well, tariffs always lead to unintended consequences. We saw that with the steel and aluminum tariffs. We saw that with some of the Section 301 tariffs on China. So of course we're going to see that again. 10% is, it's going to be annoying. It's not going to. Remember in the 2018, the 301 tariffs averaged about 15% tariff against China. And the currency fluctuations absorbed about half of that. So with the Chinese currency depreciating against the dollar about 7%. If that happens again, then we're looking at, maybe a 5% effective tariff. Annoying for sure, not helpful when you're trying to fight inflation, but not necessarily devastating.
I do want to ask you, what specific sectors do you think will be specifically hit the hardest, or who will benefit from the trade policies?
I don't know if anybody will really benefit from a 10% tariff on China, especially since it's across the board. And then with the currency, situation, it might just be 5%. But, look at where our imports from China are, largely consumer goods, retail products, plastics, but then also, chemicals. I mean, what I'm more concerned about is China's retaliation. So they just announced a list of, about 20 or so minerals that they're now going to require export licenses for.
Mm-hmm.
A lot of these minerals are used for our defense industrial base and high technology products. I think those would be something much more concerning than the 10% uniform tariff. So,
Mm-hmm.
consumer technology, semiconductors, the military industrial base, um, especially when the U.S. is trying to build up that manufacturing base in country, that I think will definitely harm the prospects of that.
Christine, we have about 45 seconds left, but with your experience at the White House Council of Economic Advisors, I'm interested to get your take on what alternative strategies to tariffs do you think can be effective in addressing U.S. concerns about China's trade practices?
Look, I mean, I don't think China is open to negotiating its non-market outlook or the way of it's doing things. So I think it's really just a matter of the U.S. working with its allies very closely on key priorities, not going too far on the protectionist side, because you're not going to get other countries to cooperate with us if they think we're just looking out for ourselves.
Well, thank you for all of that important insight, Christine McDaniel, former Deputy Assistant Secretary at the Treasury Department, Senior Trade Economist at the White House Council of Economic Advisors, and currently a Senior Research Fellow with the Mercatus Center. Thank you for joining us.
Trinity.